Welcome to the Headwaters Capital Planner. By answering just 8 straightforward questions, Headwaters AI will help you design the optimum share capital structure for your company. Whether you're just starting out or ready to take your business to the next level, let's walk through it together.
Question 1. Your details. Enter your name and email address. This identifies your session and keeps your results accessible. Question 2. Your business name. Enter the name of your business or your proposed name if you're still in the planning stage. Question 3. Your founders and ownership. List every founder's name and the percentage of ownership each person holds. The Capital Planner needs to know where equity sits today before it can help you plan where it goes next. Question 4. How much capital are you looking to raise? Enter the total amount, anywhere between $200,000 and $5 million. Give a sensible figure. That will get your product market ready and your business into positive cash flow. Question 5. What equity are you prepared to offer? What percentage of ownership would you give in exchange for the full investment amount? This is one of the most important decisions you'll make as a founder, and the Capital Planner will help you understand whether your expectations are realistic. Question 6. Your expected market reach. Are you targeting a local, national, or international market? Market reach directly influences how many shares your company should have on issue. The larger the opportunity, the greater the potential value of each share. And investors like to receive a large quantity of shares relative to the amount invested. Question 7. Your projected EBIT. Based on genuine analysis, not guesswork, if you already had the funds you're seeking and projected forward 3 years, what would a conservative average annual EBIT look like? EBIT is earnings before interest and tax, and it's a key measure investors use to assess the value of a business. Question 8. Your business stage. Are you pre-revenue, early stage, growth stage, or an established operation? This helps the AI calibrate your structure to where you actually are. Once you've answered all 8 questions, hit Generate. In this example, 2 things need adjustment. There are too many shares on issue, and the amounts for round 1 and round 2 are too high. Here's why that matters. An initial private offer has regulatory limits, up to 20 retail investors per round in Australia and New Zealand, and up to 35 non-accredited investors in the United States. So the amounts raised in rounds 1 and 2, when divided by 20 or 35, need to result in an investment amount that's genuinely affordable. If the per investor amount is too high, your raise stalls before it starts. Round 3 is where you use your remaining concessions, after which you can bring in unlimited sophisticated or accredited investors. Raising smaller amounts in the early rounds isn't a limitation. It's a feature. It creates momentum and a sense of progression that keeps investors engaged. To reduce the number of shares on issue, simply increase the share prices the AI has generated. This is one of your key levers, and it's straightforward to adjust. In this example, round 1 has a capitalized value of $5,060,000. That's 72 million shares at $0.07 each. By round 2, that value has increased. The $250,000 invested in round 1 has now grown on paper to $357,143, a paper gain of 42.9%, simply because the round 2 share price moved to $0.10. This is the power of a staged raise. As the share price increases across rounds, early investors see the paper value of their holding grow. That creates urgency, a compelling reason to get in early before the price goes up. If every share were priced the same across all rounds, there'd be no incentive to invest early. A tiered pricing strategy changes that dynamic entirely. The summary also shows the paper value of the founder's shareholdings at each round, a useful reminder of what's being built. The objective here is to bring the final round capitalized value just slightly below the suggested maximum value calculated by the AI. Use the levers in the investor discounts window to make those final adjustments. When the figure that was showing in red just turns green, you found your optimum share capital structure. That's your deal. Click Download PDF. The PDF clearly sets out the number of shares each founder needs to be allocated, either at incorporation or as a share capital restructure if the company already exists. And this cannot be stressed enough. Founders must hold their shares before any new investors come on board. Getting this right from the start protects everyone. That's the Headwaters Capital Planner. 8 questions and a clear path to your optimum share capital structure. Let's get your raise right. Our team is here to help from the very beginning.